Welcome everyone. Welcome to this episode of Market Wrap. I have with me Mr. Pankaj Pandey, and interesting day today as we speak. While the markets over the week were not that green, but today was a waterfall. What happened, sir? What is the outlook right now on the markets?
Yeah, hi, good evening, Vishu. Yes, you're right. First 4 days of the week, nothing major happened. On Friday, we have seen a market sort of cracking by 1% odd. Overall, for the week, markets are down about 1%, and even the broader markets are down about 1.5%. Sectorally, IT and defense have extended their losses for different reasons, while FMCG and MNC stocks have done relatively better. It's largely to do with the IT company results, or especially TCS, which sort of muted the sentiments on the tech counters. Overall sense is that volatility issue is expected to remain elevated because next week you have a good number of companies coming up with numbers. You have a lot of IT companies, HCL Tech, Wipro, Tech Mahindra. Then you have JSW Steel. You have the HDFC group in terms of bank, life, AMC. All of them will come up with their numbers. So you'll see a lot of action starting from next week. But I think on the tariff, markets are in a wait and watch mode. Hopefully next week we might get clarity. But I think the way things are panning out, probably it looks like it is going to take a decent amount of time for the entire clarity to emerge. Because see, arbitrage has to be relatively positive for India for it to sort of for China plus one to sort of work well. And so you have too many moving parts at this point in time. Very difficult to say. Uh, Good part is that while the markets have done well in the last 10 sessions, we haven't seen much of a retracement of the previous rally. So from that perspective, there is inherent strength in the market. Even we look at the market breadth, there are about 60% of the stocks which are trading above 200-day moving average. So from that perspective, these numbers are overall market strength is quite good. So resistance wise, again, it will be 25,800 and support again will be at 24,800. So about 1,000 point kind of a range. But what we are also seeing in between is that some weakness in dollar index. Usually it is positive for FI flows. The Indian VIX is already at a 1 year low at about 12. So anxiety levels are not so high. And I think again, the US India bilateral deal, I think all eyes are going to be there. Having said that, we will see more of a stock specific action. It's very difficult to comment on the US trade deal. So I think next week, result seasons are actually starting.
Absolutely. Sir, one of the most interesting data points to look at, for me at least, is the mutual fund inflows because they kind of give you a litmus test for the market sentiment and how retailers are investing. What do the numbers say right now?
Oh, yes, Vishu. I think last month number, so May number was, say, about, I think, 16,000 odd crores. So that gave a sense that customers are or investors are sort of getting jittery. I think there was a fear also earlier that if the market does not do well, inflows will sort of dry up. But I think what from the June numbers, what I can sort of conclude is that May was an aberration. You're seeing more of a normalization of inflows. Now, coming specific to numbers, inflows in the month of June again bounced back to about 23,600 compared to about 19,000 odd crores. And if you sort of strip out the NFOs, it's about 22,700 versus 16,300 crore in the month of May. And all the core categories. So flexi cap has witnessed a higher flow of about 5,600 compared to 38. Mid cap again 3,800 versus 2,800 a month before. Small cap again higher at 4,000 versus 3,200. Multi cap also has seen a higher inflow. So all your core categories, the inflows have been good. I think where the inflows have been sort of weaker is thematic. I think thematic is out of favor at this point in time. And I think the most important number is the SIP inflow. So those have come at a record high of 27,269. So from that perspective, I think we've seen a good rebound in the overall inflows. One more thing is that, we have seen gross inflows being higher and people have not done the redemption the way it happened a month before. And so it's a combination of all of this because of which I think we've seen a good rebound in the MF inflows. And I think with this run rate of nearly 26,000 odd crores, we are inching towards the 3 lakh crore kind of an inflow this particular year, which again is pretty good. And on top of it, yes, dollar is also weakening, so that augurs well for FI flows as well. So liquidity-wise, no major challenges or obstacles we see for the markets not to do well.
Absolutely, sir. Sir, one of the other data points to look at, you just mentioned results are right around the corner. Of course, TCS is the leader there, and it kind of gives us some headwinds as to what the results would look like for IT. What did the print say for TCS?
So Vishu, technology or especially TCS, the revenue imprint was definitely weak. So the dollar revenue was down about 3.3 odd percent quarter on quarter basis. Bulk of the decline obviously was anticipated because of the BSNL ramp down. So that contributed 2.8 odd percent. But the international revenues also declined 5.5%. So no major changes there. We've seen margin uptake of about 30 odd bips. Vertical wise, we have seen BFSI and consumer verticals. I think those have been impacted because of their tariff related uncertainties. Only saving grace was that the TCV stood at 9.4 in line with the last 4 quarter average. I think what you're clearly seeing is that clients are preferring or client behavior is shifting from exploratory mode to a case-based approach where they are willing to, or they would want some return on that particular investment they are looking to do, and which is sort of delaying the overall process. And I think while attrition has been sort of lower, the company has pushed the wage hike by some more time. So all in all, I think near-term visibility is muted. We all understand that U.S. Economy is still also facing a lot of uncertainties, especially related to tariff, and IT is clearly sort of bearing the brunt. And I'm not very hopeful even for the next quarter also because we are sitting in the month of July. A lot of negotiations might go beyond August also. You never know. So even next quarter also, I'm not very hopeful of a meaningful rebound in the overall spend. So I think what we're clearly seeing is project deferrals, reduced scope of work, extended decision-making cycles, and that is likely to stay for a quarter. And with that in perspective, we have assigned a hold rating to TCS. I think the company or the sector lacks sparks to sort of do well or outperform the market. So I'm not very hopeful uh, for the entire IT sector overall, and I think TCS in particular as well.
Absolutely, sir. Let's. Can we also get a preview of the consumption trends and maybe the FMCG sector?
Oh yes, so Vishu, if you look at FMCG sector has sort of underperformed the broader indices in the past 2 years. I think it has delivered a return of about 6 odd percent, whereas Nifty or Sensex doing somewhere about 25 to 28%. So it's a significant underperformance. And lastly, because the demand has been weak, and I think valuations are negative. So there is a was a disconnect between the kind of growth that these companies are delivering and the kind of multiples they were sort of attracting. Now, from that in perspective, overall, what we are clearly seeing from the commentary is that the companies are guiding for a sequential recovery in demand, especially on the rural side. And on the urban side, the demand is witnessing a gradual uptick. So on a relative basis, it is definitely positive. And on top of it, monsoon up till now, the spread is good, except for portions of Bihar. Most of the places, or most of the districts have seen normal or above normal rainfall, so which is good news for FMCG. I think EBITDA margins are expected to remain under pressure for most of the companies because of the palm oil prices. So they've started come down, but I think second half is where we will see some improvement in the margins. Industry overall is guiding for a better FY26 compared to FY25. And coming to some of the company specifics, I think Marico did very well. So Marico volume growth is 8 to 9 odd percent. This is the company which is talking of 20% kind of a revenue growth. So they're clearly sort of outpacing a lot of other players in their domain. Godrej Consumer is also sort of come up with a okay set of guidance. So they are expecting a mid single digit kind of a growth. And this is excluding the soap. If I exclude the soap business, the growth is expected to be in double digits. So that is another company which is doing okay. Dabur is getting hammered because of the competition what we see in the beverages segment. So overall, Marico expected to deliver nearly 20% kind of a top line growth. You will have Godrej Consumer at about 10 odd percent, Tata Consumer again 10 odd percent, and you will have something like Dabur, which could deliver a muted 3% kind of a growth. Things are picking up, but whether it makes us very bullish on the sector, answer is clear no. I think it's very unlikely for FMCG sector to outperform the Nifty earnings on a 2-year basis, and which is why, while yes, there is an improvement, but one should not expect a beyond FD kind of a return in FMCG as a sector as of now.
Absolutely, sir. Sir, moving on to the financial sector and that to PSUs, I think there was news this week that government may be planning for disinvestments in PSU banks. Any thoughts on this?
So yes, Vishwa, I think there are a number of things which are moving in pieces. One, SBI is looking to raise 25,000 odd crores, so that's a big amount for growth purpose. I think the top of the talk is the stake sale in IDBI Bank. I think that's been sort of languishing for quite some time. Now there is a hope that by October things will happen. And I think that will be a big boost to the overall disinvestment drive because government holds somewhere about 45% kind of a stake. They would be selling about 30% of it. So 15, 16% is what they're going to retain, and that would fetch them about 33,000 odd crores. That's a significant jump. And I think in order to comply with the minimum public holding shareholding norms, government will have to offload some stake in say in banks like say Bank of Maharashtra, Indian Overseas Bank, UCO Bank, I think Central Bank of India, and Punjab and Sindh Bank. Each bank they'll have to dilute in the range of 8 to 10 odd percent because the government stake is quite higher. And this happened because when in bad times the government had infused money. So they are expected to garner stake sales in these is expected to garner 12 to 15,000 odd crores. So yes, next 3 to 4 months you'll see a lot of action on the PSU counters. Uh, so from that perspective, in general, PSUs relatively look attractive to us compared to the counterparts. One of the results which came out in the BFSI sector was IREDA. I think numbers, so top line wise, absolutely fine because AEM growth was good at 26%. Sequential growth was also closer to 5%, so largely driven by renewable energy sector, which is what its domain is. We see a margin improvement there, 30 bips, because the cost has sort of come down, the cost of borrowings has come down. But profit took a knock of about 36 odd percent because of the elevated credit cost. So one obviously account is the Gensol, which has led to the overall higher credit cost. And there is some more slippages what we have seen. Hopefully, our sense is that these are one time, and we are not going to see a recurring of this. So yes, while the gross NPAs, net NPAs are higher for the quarter, but I think these are sort of one-off according to us. Good part is that the government has allowed it to sort of raise bonds through under 54 EC, so which would mean that they will be able to sort of issue bonds at a lower cost. This is done when you sort of buy and sell property. Capital gains tax, if you don't have to pay, you can subscribe to some of these bonds, which attract lower rates. So from that perspective, IREDA slightly disappointing, but outlook-wise, I think looks okay. And now, in terms of some provisional numbers which had come out, I think IndusInd Bank, I'm not reading too much into the numbers. I think the bigger focus there should be the clarity of the top management. I think that is the bigger clarity which is awaiting. Kotak Mahindra Bank, good set of numbers. I think clearly it is reflecting the lifting of the RBI embargo because now they are able to sort of revive their customer acquisition and business momentum has improved. And Bank of India, in line with all other PSU banks, did a sort of inline numbers, 12% kind of advances growth. So from that perspective, uh, PSU banks will witness some action. Private, again, subject to some of the names. I think Kotak Mahindra Bank, good set of numbers. So I think that is doing relatively better, and I think that got reflected in the share prices as well. But yes, PSU banks is where we would see action in the next 3 to 4 months.
Absolutely. Another news this week was Glenmark Pharma's exclusive licensing agreement. I think that says set a new precedent. So, what does it really mean for the Indian pharma?
Oh, yes, Vishu. I think it's a watershed movement in Indian pharma. I think to sort of put into to context, there are about 12 blockbuster drugs with annual sales of nearly $200 billion, which are going to lose patent protection. So obviously, this is an opportunity for a lot of players because this kind of a patent cliff again would lead to some outsourcing of R&D for CDMO players. It could also lead to some licensing deal. That is what we have seen, and it will also unfold opportunities for generic and bio similar players when the product goes or the patent expires. Now, this deal has to be seen from probably that perspective. So I think Glenmark's subsidiary is expected to receive about $700 million of upfront payment for a drug which is an orphan category. So in a orphan drug status category, typically the overall commercialization happens faster, and our sense is that this can be a good money spinner. So while there are another 4, 5 candidates, Glenmark has, and also it is going to revive interest in other R&D companies. So from that perspective, overall sense is that the entire setup is looking positive because as these patent expires, so all your big pharma companies will either look for in-licensing deals or look for other avenues to sort of prevent a decline in their revenues. And I think Indian companies like Glenmark could have a role to play. I think R&D was something which was written off from Glenmark, but I think this deal has sort of revived. And I'll not be surprised if, like I said, this is going to remain company specific. We could see many more deals going forward. Because, like I said, you have a $200 billion patent expiry, or it's a big patent cliff coming up, and that is going to unfold opportunities for various segments, including a company like Sun Pharma, plus CDMO players, plus even companies which are going to launch the generic version once the patent expires.
Absolutely. And finally, sir, it's time for the hidden gem of the week. Which will it be this time?
So, Vishwa, I'm recommending a stock which is quite beaten down. So, Neogen Chemicals, here our target price is 1940. Now, this company witnessed a fire incident, and because of which the numbers are going to get impacted. But nevertheless, we still like the company because this company manufactures specialty organic bromine-based chemicals, typically find application in pharma, agrochemicals, engineering fluids. Now, this is one of the few companies we like because of the potential it carries for battery chemicals, especially electrolyte and electrolyte salt. Now, overall, this EV drive is going to require, I think, somewhere about 160 gigawatt of lithium cells by 2030, and about 60% of that has to be indigenous battery material, which means that the electrolyte demand is going to be about 160,000 tons, and basis that the salt demand could be about 15 to 22,500. Now, this company is putting up a capacity of 32,000 tons of electrolytes, so significant capacity, and also for the salts of about nearly 5,500. So it is nearly sort of looking to have 20-25% kind of a capacity there in both electrolytes and electrolyte salt. And why we are sort of getting confident is that for doing this, it is putting a capex of 1,500 crores. Out of that, they've already spent 470. The interesting part is that they've got very good partners. So they for electrolyte salt, they have a JV with a Japanese company called Morita Chemicals. I think this company has pretty strong capabilities against even Chinese players also. Similarly, for the lithium and battery electrolytes, this company has partnered with Mitsubishi for securing a technology. So they've got very good partners, and which is why it gives us confidence that probably FY26 numbers could be slightly muted, but things will start improving from FY27 onwards, and which is why we like this stock with a target price of 1940.
Absolutely. Well, that was it for this time. Thank you so much, Pankaj sir, for your insights, and thank you so much, everyone, for watching. We'll be back next week, same time. Till then, if you have any questions, please put them down in the comments. Thank you again.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.